This is Paul Donovan from UBS's Global Economics Department. Yesterday, Fed President Hoenig, who is an economist and therefore to be revered and venerated, declared that it is, quote, hard to offer a clear outlook on the U.S. economy. President Hoenig was, of course, being diplomatic. It is not that hard to offer a clear outlook on the U.S. economy. It is down a lot, down with no prospect of a reprieve in the near term. All we are able to do now is to see how best to minimize the duration of the downturn. The inevitability of the downturn itself is set. We are gazing down into a deep abyss for economic growth, and the only part of the outlook that is not clear is where the bottom lies. Which brings us neatly to the U.S. employment report. We're looking for payrolls to come in down, of course, with a 100,000 decline, which is basically consensus. The benchmark revision will take place, which covers past data. We expect the back month data to be revised down, as the Bureau of Labor Statistics normally overestimates employment in the early stages of a downturn. We expect average hourly earnings growth to be down relative to last month, with a 0.3% gain. The one bright spot is that we do see unemployment down by 0.1% to 6%, but we see the trend as continuing to be up. We then have the non-manufacturing ISM survey after the disaster of the manufacturing sentiment survey earlier this week. We see service sector sentiment down at 49. There is nothing positive in any of the economic data this week from the United States. Even the presidential campaigns are not capable of spinning this stuff as good news. It is a week of bad news. Service sector sentiment in Europe is also due today and, of course, is forecast down to 47.1. We do get a House vote today on the Paulson plan, or at least we will if Speaker Pelosi believes there are enough votes to get it passed. It is not the final solution to this crisis, not by a long way. However, a successful package may mark the end of the beginning of the crisis. There are still some disquieting reports of demands for revisions, less money, and so forth. Any revisions would require another Senate vote and drag this process out even longer. More fundamental action is expected from the UK and from Australia next week. We have revised our rate calls for both economies today, and of course, we have revised our rate expectations down. We see the Bank of England easing next week by 25 basis points, en route to a total of 175 basis points of easing by this time next year. That will bring some relief to poverty-stricken economists on base rate tracker mortgages. In Australia, we're expecting the Reserve Bank of Australia to ease rates 50 basis points next week, with a further 50 basis points of easing coming after that. French President Sarkozy's plan to allow UK taxpayers to pay to bail out French banks has apparently been shouted down by his fellow heads of government. Yesterday he elegantly denied the sum and the principle of the proposal. The heads of government of the four largest economies are still gathering together in Paris tomorrow, though it does seem relatively unlikely that anything constructive will come out of this. That's all for today. Have a good day.